Welcome into the Smart Mortgage Show. I'm Ben George with Bill Litton at Cross Country Mortgage. Good to see you again, Bill. I know we head into September, the fall months, and there's a lot coming up. A lot of news I know with the Fed meeting, and also with these projections as people are looking ahead to the new year.
Yeah, there's a lot of there's a lot of talk of rates coming down, and on September 17th, the Fed will likely lower interest rates. The question is, will it be a 25 basis point or a quarter of a percent or 50 basis points, half of a percent reduction? But I think most economists agree that there's a strong chance the Fed is going to lower the key interest rate, which is the federal funds rate. And that's also barring nothing, coming out of left field or any unforeseen extenuating circumstances that are not yet built into this forecast. So if we keep cruising along like we are, based on where inflation is, it's still persistent, but it's moderating. Chairman Powell has recently said that he believes that the tariffs will play a part in inflation, but it's a one-time transitory inflation, not compounding. With all of these factors, we do think the Fed will cut rates on September 17th. My feeling is 25 basis points. It's either going to be 25 or 50 basis points.
I know that anything can change, right? It does seem like over the last month or more, really, I guess you could probably say all of 2025, it just seems like it's kind of been up and down, up and down. Will it happen? Won't it happen? There's big news potentially happening. Okay, maybe the news isn't so bad. It's just been a lot of back and forth, it feels like.
I think there's a lot of back and forth because there's a lot of mixed signals in the economy. GDP is strong. The equities market is on a tear. So people feel good about watching their 401ks in general. So you see this positive movement, these overarching positive segments of the economy. But then there's other segments that are showing signs of weakening and slowing, job creations, unemployment, things that are leaning in the direction of a slowing economy. And the Fed wants to kind of get out ahead of any slowing with accommodative rates, accommodating businesses with lower rates on business loans, kind of greases the wheels a little bit to keep things moving. But at the same time, reigniting inflation would certainly be a major issue. So they're very cautious of that. So they're walking a bit of a tightrope here. I feel like there's enough data to the downside that says that they should cut. And I'm not alone. And in fact, my opinion is merely just what I read from a lot of well-known and reputable economists putting out their forecast.
Yeah, it's interesting to watch. I know we'll be keeping an eye on that, and I know it'll impact what you do. If you have any questions for Bill or want to discuss rates, again, go to smartmortgageshow.com. You can also call 484-352-4151 to get in touch with Cross Country Mortgage. As I mentioned, some forecasts are out for 2026. I know everybody's asking, hey, what's going to happen with rates in the future? It's a question people ask all the time. It's why we discuss it here on these market updates all the time. But now we're starting to see some projections from some notable organizations for 2026.
Yeah, and I think that one of the things to note is there have been some surveys done of homeowners that say, what is the interest rate that could get you to give up your super low 3% COVID interest rate? You want to move, but you don't want to get into a new mortgage at 7%, which is more than double. Well, what is the interest rate that would make you say it's time to move and I'm okay if the rate is higher, not 7%? I think that number from what we've seen is somewhere under 6%. Now, a lot of these forecasts don't have us under 6% until late 2026. And I think these forecasts are all within a certain range, and I think that they're a little bit conservative, but I do like that because, previous year's forecasts have been way off. They've not gotten to where the interest rates are currently. So, for instance, the forecast from the Mortgage Bankers Association saying that the average rate levels off at the end of 2025 at about 6% or 6.5%, which we're getting closer to now. And then that by the end of 2026, we're closer to a 6% interest rate, okay, by the end of 2026. So that's not a dramatic movement in interest rates. It is a decreasing rate environment, but it's not a dramatic movement. Fannie Mae, end of 2025, saying 6.5%, gradual decline to about 6.1% by the end of 2026. National Association of Realtors saying that the average 30-year fixed rate mortgage is going to be about 6.4% by the end of 2025, 6.1%, potentially slightly below 6% by the end of 2026. So these are all kind of in line with each other. And I feel like we're getting closer to interest rates stimulating the market, which is a good thing. And I do feel like, again, all of these things, as we say over and over, are barring any geopolitical global event that could throw the numbers off dramatically. But barring those, I feel like these are a realistic view of gradual declines in a controlled market where most factors are under control.
Yeah, that's good information. And it probably won't make a lot of people happy, Bill, that have been on the sidelines kind of waiting and waiting and waiting, because it doesn't seem like most people expect a drastic drop. But 6.5% to 6%, if you could get down to 6%, which a couple projections are right around that number, that would be a big help for a lot of people.
Yeah, and to your point, Ben, it's definitely not a number that people are going to be jumping to put their house on the market for. It doesn't, the surveys suggest a little bit lower is where they want, the consumer wants the rates to be. But I will say that it is a decreasing rate environment. They see rates decreasing. This is a realistic decrease. And I think it does, certainly for first-time home buyers, it's a ray of light for them, because they're now going to get into, instead of a 7% rate, it's going to be closer to 6%. A percent makes a big difference. And some of the people that we helped to purchase homes that were in the 7s, it's going to be time for them to refinance, and they're going to have some good options available. So it's definitely going to help a good subset of people in the market, a good subset of homeowners.
How often, Bill, are these rates adjusted in terms of projections? I mean, if projections now, will they have a different projection at the end of 2025, or will this kind of be their one loan projection for 2026?
So the projections and the frequency with which they revise the projections are different for all of the MBA, Fannie Mae, NAR, anybody that's weighing in on these. So they will update and adjust their projections as markets develop and situations change. So it's something that we're definitely going to keep our eye on, because what's really most important about this is how this pertains to you, the home buyer, and how that affects your ability to purchase and your finances, and how we plan accordingly with the right loan product and program and loan structure to put you in the best position possible.
All right. Well, great information. Hopefully this helps you out, gives you something to look forward to. Hopefully rates will come down, and obviously the projections aren't official, and nothing will definitely happen because of them, but it is good to kind of see what people are thinking for the new year. But if you need help with your mortgage now, or thinking about buying a home in 2026, want to begin that conversation, get some information, it's never too early to start shopping around. Cross Country Mortgage would be more than happy to sit down and spend some time with you, Bill, and his team. We'd love to hear from you. You can contact them, smartmortgageshow.com, or just text the word LEND to 21,000. Again, LEND to 21,000 to begin that process. But I know we'll probably have some reaction to this September Fed meeting, Bill, and see where the rest of the year takes us. So thanks for the info.
Yeah, thanks so much, Ben. Appreciate it.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.